Welcome to The Explainer. Today, we're breaking down a new idea in home ownership, and it's a big one. Imagine paying for your house for half a century. Yeah, we're digging into this pretty wild new proposal, the 50-year mortgage. I mean, let's be real, with home prices just soaring, getting into a home feels pretty much impossible for so many of us. So this new idea is starting to get some traction. It promises a new path to ownership. But we have to ask the big question. Is this actually a helping hand, or is it a trap? Okay, so let's start with a reality a lot of us are facing right now. That dream of owning a home, it just feels like it's getting further and further out of reach, right? This is the housing affordability crisis we're all hearing about. And it's forcing the financial world to get, let's say, creative with their so-called solutions. So what is this big idea they've come up with to tackle the crisis? Well, some folks are proposing a really radical shift. We're talking about stretching the life of a home loan from the traditional 30 years all the way out to 50, a full half century. Okay, let's dive into this. The main appeal, the big sales pitch, is actually super simple. A lower monthly payment, right? I mean, the idea is that if you spread the debt out over way more time, each payment gets smaller. And that makes that dream home seem a lot more affordable, at least on the surface. So, on the surface, it looks like a pretty simple trade-off, doesn't it? You've got your standard 30-year mortgage with a higher payment or this new 50-year option with a lower monthly bill. But, there's a catch, and that's the total interest you'll pay. The real question is, how much are you really saving each month, and is it worth it in the long run? But, and this is a big but, when you actually look at the math, the whole thing starts to look a little shaky because the difference in your monthly payment, it's surprisingly small. I mean, really small. Okay, get this. In a pretty typical scenario, after adding a whole 20 years to your loan, you'd only be saving around $79 a month. Yeah, you heard that right, $79. That's it. So, this is where the story takes a really dramatic turn. If you're only saving $79 a month, what's the real cost? What are you actually giving up for that? Because when we look at the long-term numbers, things start to get, well, a little scary. Okay, now what's really wild is the staggering difference in the total interest you'd end up paying over the life of the loan. It's not just a little bit more, no, it is a massive difference. We're talking about a completely different financial universe here. So here's the crucial point. For that tiny $79 monthly saving, you end up paying over $500,000 more in interest. Just let that sink in for a second. $500,000 more. It's absolutely astronomical. The source we're explaining today uses this really powerful metaphor to describe this kind of product. They say it's not a real solution, it's not even a fix, it's just financial duct tape. And what is financial duct tape? Well, it's a short-term fix, right? It's designed to keep the housing market moving, not to actually help you, the borrower, build any long-term wealth. It's a strategy that props up the whole system, but it comes at your expense. It just keeps the machine going. And this really illustrates the core danger here. You pay for decades and decades, but you build equity so slowly that it's almost like you never truly own it. For the first couple of decades, your payments are almost entirely interest. So you're basically just a permanent renter in your own home. Okay, so let's just quickly recap what we've uncovered here. The monthly savings are minimal, like tiny. The long-term interest cost is absolutely massive. At the end of the day, this whole thing seems to benefit the housing system, not you, the buyer, and it seriously slows down your ability to build real wealth through home equity. So the final thought we'll leave you with is this. When you're extending a loan for that long, for 50 years, who are you really paying? Who truly benefits from all those payments you're making for half a century?